Okay. A bit of a lag. There we go. So you guys can hear me, if you can see me, please comment in the chat. We're just gonna wait a few minutes. Make sure. Okay. Okay, thank you guys. You guys know how to pin a comment by any chance? I'd like to pin the strat candles. So as people hop on, they know what I'm talking about if they're not familiar. Let's see if I can get the image. No, it's a minute. October. All right, we'll just give it a few more minutes here, guys. You guys mainly day trade? You swing trade? How long have you known it? All right, now more people are coming in. Yeah, me too, Kendra. I did long-term investing. I'd like buy like 1 or 2 stocks a year. And I did that for like probably 5 years. I still have long-term investments, but the last year I started messing with options and day trading a ton, swing trading. I really didn't start making some money until I found the strat like 2 or 3 months ago. I've done every mistake in the book. Okay. All right, so we're gonna get going. People will funnel in, but I have this up here in case people are unfamiliar. The strat refers to 3 different candles. There are 1, 2s, and 3s. 1 is also known as an inside bar, and that stays inside the previous bar's range. So it doesn't go higher than the previous bar's high or lower than the previous bar's low. It kind of just chops up in the middle here. A 2 takes out one side of the previous range. So the strat will say like a 2 down if it takes out the low of the previous bar, or a 2 up if it takes out the high of the previous bar. But it only takes out one side. So that's a 2. And then you have a 3 that takes out both sides of the previous range. So it takes out the high and it takes out the low. So in the strat, they say, a 3 was a 2 to begin with, either a failed 2 or a 2 that already hit magnitude and now it's coming back through the range. So in this case, this was, since it's green, it opened here, probably came down, took out the previous candle's low, and then maybe it hit magnitude, hit some targets, and then it reversed back up and took out the previous bar's high. The 50% rule, so if you can imagine like a line right here, like at the 50% mark of this previous candle's range, the 50% rule, which I play a lot, and Sarah, the strat sniper, came up with it. It's actually really useful, but that's when, a 2 forms, so 2 down forms, and starts reversing back, whether it's on the daily, on the hourly, on the 15-minute, whatever it may be. And if it passes this 50% mark, she says there's a high probability it's going to take out the opposite end of that candle. So I've had a lot of trades where I'll scan on Thinkorswim, and then I'll go into my Webull and draw in like my Fibonacci lines. And if it's past the 50%, I'll just buy like a call to hit this high or a put to hit this low. Okay, so for people that don't know, TradeMatrix community, it's just a group of people that invest and trade in various markets, whether it's commodities, futures, options, stocks, crypto, it could even be real estate. I started this group, I think last spring, and the reason I started it was to kind of start sharing this information with one another. I think we all have a lot to learn from each other, and I'm creating a mobile application for investors that I'm hoping to launch here in the next few weeks. And it's a social network that pulls in real-time data. It allows people to share like their research, their opinions, their strategy with one another. Just like people do on Twitter, on Facebook. Some people even do it on Instagram, right? But it's in a platform specifically designed for investors, and we're going to pull in stock and crypto data. So if you guys haven't joined the TradeMatrix community, that's the best way to get updates on the app and share your experience, your knowledge, learn from one another. The app is going to be free, but you can subscribe to people that choose to set a subscription price and post premium content. So that's completely optional though. So thank you guys for hopping on this live. I just wanted to kind of go through my process. I did one of these before, my process that I go through every day at after the market closes to find plays. So I have my notebook here that I write everything down. I used to do it on an Excel sheet, but I found it is a lot easier to have it handwritten in a notebook so that I don't have to, switch between screens and bring down my charts and all that. I have an Excel sheet to track my trades so I can review them at the end of the day, so I can know how much I made, how much I lost, put any details in, why I got into a trade. Then I can review them at the end of the day and see, why did it fail, why did it win, all that sort of stuff. So it's important if you're going to trade these things like heavily, specifically options, and if you're doing day trading and swing trading, to track your trades. And I also want to go through, so I have several watch lists. Recently, I switched back. I had a bad week. Really what had happened was I was swinging a lot of stuff, and it had been working for several weeks. And then one day I swung 5 puts that were, 1, more expensive than I typically was doing. 2, they all were in tech. And I swung them, and the next day it opened and it wiped out a ton of my account. So anyway, the reason I say that is I'm mainly going to be going through my watch list that is like the cheap watch list. It mainly has contracts that are near the stock price. The strike prices near the stock price the premiums are about like $150 or less. And I like that because you can buy multiple ones, or you can buy one without, blowing up your account. So I'm doing that for a little while until I get back into the big names. So I have my watch list. The way I do this is I go through my main watch list of just all the stocks that I'm willing to play. If I find a play on them, I move them to my picks. And then when the market opens, as they alert, I move them into my alerted picks. I do not play them. I try to barely even look at them until they alert. So we're gonna go through this. I already went through what parameters to use to come up with the cheap watch list. Yeah, so that's really just oh, sorry. So that's one, I want them to be like, I want the contracts that are like, so if the stock price is $50 currently, and I want like the $51 put or the $52 call, I want the strikes that are closest to the stock price to be about $150 or less. So that's parameter one. Parameter two is that I've watched them for a while, and I know that they are popular and that they move, right? I know that the premium and the stock price move, because it's not very good if you get a contract on a stock that's only moving 30 cents in a day and the premium is barely going to change. So you don't want that. And I just kind of added to this over time. You got a lot of names in here you guys will probably recognize. But you can see like my picks, they're mainly like, I think most of the stock prices are below 150. In my regular watch list, like we got bigger ones like Boeing, Target, we have Coinbase, we have Caterpillar, Datadog, we have Square, we have Net, Facebook, Baba, Nvidia, Snow, Netflix. Like those are all a lot more expensive. So you got to trade according to a plan. You can't, if you want to do $200 per trade, you probably can't trade Netflix options. So that's really like, this is according to my plan. And in the strat, they say, you kind of have to do battle. Like you'll get in and then it could get stopped out. You might have to get in 2 or 3 times before it hits your target. And if you only got $2,000 to trade with, and you're buying option contracts that are $500, you're only going to get 4 trades in, so you don't want to do that. Okay, hopefully that answered your question. Okay, so I'm going to go through, I already went through these and found picks, so I kind of want to go through those because last time I did this I didn't get through many. So I kind of want to go through ones that I think at first glance I saw a play on. And I'm sure I will remove some of these. So let's go to AMC. And the way I have these charts set up, we have the monthly down here in the bottom right. We have the weekly in the top right. We have the daily in the top left. And then we have the hourly here. I also have the average trading range up. That's important because if I have a target that's $15 away and it's a day trade, but the stock only moves $5 a day, I'm probably not going to take that because it's not going to hit the target in the day. The hourly, the only reason I really have the hourly up is to one, see how it played out during the last day, and 2, to draw more specific lines because the magnet function isn't the best on Webull. All right, so let me delete these lines. So we have AMC. I typically go through and I look at the weekly and the monthly, and I see, is it exhausted to one side? Is it kind of hanging in the middle? Would I want to do a put or a call on these? So AMC, you can see it's slowly going down. It broke out of this range eventually this month. You see on the weekly, it's kind of got this little channel and it broke below right here. There's a green hammer. So I wouldn't want to take AMC to the downside. I'd want to take it to the upside. So what I'm looking for is I'm looking for a daily break of a candle that can force the week or month into one direction. So in this case, the weekly high for last week is 30.71. The daily high from Friday is 30.71. So this is why I had this play. So if we break above 30.71, which is Friday's high, and I always put a red line at the opposite end. And why is that important? That's important because if we break the low of Friday and then we break the high, it's going to be, this is just my experience, it's less likely that it's going to hit your targets. So a better play on this would be a 50% rule versus getting in after it alerts the daybreak high after it already made a 3 and then trying to hit your targets. So anyway, AMC, right, we break 30.71. We're 2 up on the week. And that won't flip the month green yet, but we're exhausted. We look pretty exhausted to the downside. So that's a valid day trade in my book. Next target's this candle. Next target's that candle. And so this one is a weekly target. So I'm gonna write that in my book. I will take a picture of this book afterwards and I'll send it to you guys. So we're looking for up on AMC, 2 up is the play. We want to break 30.71. That'll make a 2 up week. Our high is 32.95. Our second target is 33.92. Okay, so then it's already in my pick list, so I don't have to move it. But then I set an alert above 30.72 because if it hits 30.71, it hasn't made a 2 up day yet. It's still an inside day. So we want it to break above the previous day's range. Okay, so that one's good. Starbucks, let me move these lines. We're an inside bar on the month. We have a big 2 down week. Kind of just chopped in here. I might have wanted to do a gap fill play on this. Is that what I wanted to do? What's the low? So let's see what the low is to make this monthly bar a 2 down. We have to take out 107.20. So that. Let's see. These lines aren't super accurate. That's why I had it. Okay, so gap fill play. Is this for DT or ST? Are you saying day trading or swing trading? Is that what you're saying, Andre? Okay, so most of my plays are for day trading. It's like a 50-50 shot when I swing trade options. So recently, the only things I will swing is like a monthly setup. If it's a weekly setup, I usually don't swing it. So majority of these are going to be day trades, but they're valid like swing trades too. Does that make sense? I just don't personally like swinging, so I like looking at the weekly and monthly setup to determine a direction on the day. And with options, they're very volatile. So I try and just get my win for the day and get out versus risking the overnight swing and then waking up and it just turns the opposite direction. Okay, so I think I had a gap fill play on Starbucks. So if we break Friday's low with gaps, they say, it's either going to fill it or it's going to continue to go down. So we could play both sides of Starbucks. So if we break the low, we're actually going to break and make a 2 down on the week. And then the next target is going to form a 2 down on the month. So the put is the better play here. Actually, I don't even want to do a gap fill on this. A gap fill would be to the upside where you target the low of this one. So to fill that gap, but I don't even want to play that. So I'm just going to play this to the downside. If it breaks Friday's low, our next target on the daily is the target to form a 2 down month. Does that make sense? So we're going to write this down. We're going to do puts on Starbucks. We're going for a 2 down, 2 down. It's a gap already. So we want the gap to continue. So we want to break below 108.22. We want to break below, or the target is 107.20. to form a 3 down, or I'm sorry guys, 2 down month. And if we break the daily, that forms a 2 down week. Okay. So break daily 102, 108.22 to form a 2 down week and a 2 down day. And then we target the next daily target, which would form a 2 down month. And then if you do want to swing it, or you have extra contracts, you want to leave them run, you can target this next one, which is 104.02, which is not only the daily target, but it's also this monthly target too. Day/month. Okay, so we set the alert below 108.21. Okay, Qualcomm. Let's see. Let's get rid of these lines. What was I looking for on Qualcomm? Okay, so Qualcomm, it almost formed a 3 on the week. As you guys can see, it passed the 50% mark, but it didn't take out the low. But there's something called compound bars when you get a little better at recognizing this, where, you know, next week it can easily break below and form a 2 week, and then it'll take out this low, right? And so if you look at last week's bar and this week's bar, it would form like a compound 3 that would have taken out this high and this low. So why did I have this? That's why. Because this thing's exhausted to the upside, okay? If we break below Friday's low, we're forming a 2 down on the week. And then what would I target? There's a small daily target there. Is that the same? 172.27, 172.27. Yeah, so the daily target is also the weekly target to form that compound 3. So let's see if that's even worth it. 175.02. Okay, so that's a almost $3 move. So it's a valid play. It's a nice day trade play. Okay, so down on Qualcomm. 2 down, 2 down. I want to break below 175.02. We're targeting 172.27. Create our alert. It's also important, guys, if you're like going through this, oh, that's not right, because it's not a call to put. Okay, so below 175.01. It's also important if you're doing this on your own, like there's some days I'll go through and it's like all puts on my watch list or all calls. I try and make sure I go back in and find some on the opposite end. I want decent picks on both sides, right? Because you don't know, the whole market could be up, the whole market could be down, and you want to make sure you have plays on either side. Okay, so Penn, you can see on Friday, Penn had this pivot machine gun. High, lower high, lower high. 1, 2, 3, 4, 5, 6, 7. There were 7 lower highs. That's a big pivot machine gun. This is what I was saying before. This is why I marked the opposite end with a red line, because this made a 3 and it only took out 2 of your targets. But if it didn't make a 3, it might have gone through this pivot machine gun, but it didn't, probably because it already made a 3. That's why I have it here. So it's exhausted to the downside on the month, on the week, and really the way I look at that is, are there a lot of 2 downs or a lot of 2 ups on the week and month? If so, then it's probably exhausted to one side, so you're not going to want to continue in that direction. You're going to want to take plays that reverse, because at some point it's going to reverse, and you don't want to just get in. Like if you got in on this one, look, you got 2 down, 1, 2, 3, 4, 5, 6, and inside bar 7 2 downs. You're not going to want to play another 2 down on this. it's just risky. Like, it's riskier in my opinion. So the daily took out some of these targets. So we can draw this. So if we break above Friday's high, we're making 2 up on the week. And then the next target, high of 48.38. Next target is 49.04. Lock that. Next high is there on that bar. Next high is there. And you also, so if you're like swing trading this, if you're like, I'm just gonna buy in, like maybe you're working, right? You don't have time to watch this all day for the daily targets. You can just buy in, extend your expiration like an extra week or two, and then just target this candle's high. So 53.37. That's what you could do. Since I'm day trading though, there's a ton of other targets in here. Just know that it may pull back at each of these targets, but you could do that. You could just go light, buy when it breaks this daily high, and just hold it until it hits, your weekly target over here. All right, so calls on pen. We got a 3, 2 up. That's our play. We want to break above 48.38. Target, and that forms a 2 up week. Our target is 49.04. Next target is 52.05. So if you break through that first target, you're going to make a lot of money on calls. And then our final target is 53.02. And then there's another one, 53.37. Okay, let's see. In pen, the first target is really small. How do you play that with options, or do you aim for your second target? So it is very small, but you also got to consider the price of the stock, right? So that target is only, so 48.38 up to 49. So that target is only, what's that, 80, 70 cents away, but it's only 70 cents away, but you could make decent money on it. Hang on, let me see. It's because the stock price is low, so I still would target that. Let me go to pen. Okay, 23. So if we did this one, how do I see? So I'm trying to find the delta and theta on this. Oh, it's right here. Okay, so 49. Okay, so the delta is 44 cents. So it's $1.30. Okay. $1.30, 44 cents. That's a third. That's a little over 30 cents. That's a 30-cent gain, or a 30% gain. So on a dollar move, so you'd be making like 20% on that first target if you had call options with Friday's expiration. So that's like 20%. Pretty good for day trade. That's kind of how I determined it. Now, but you're right. If this was this stock was like $100, $150, like I would just skip that first target. I'll just make sure to set, like, walk my stop up along with it. Hopefully that made sense. But your targets can be close. The cheaper the stock price, the closer your targets can be, because you're still going to make decent money on it. The higher the stock price, you want your targets to be kind of like proportionally further apart. Okay, so above 48.39, and we're getting it. Peloton. What did I see on this? I don't like this. I'm not even going to play this. Similar play to pen, right? It's exhausted to the downside. 2 down, 2 down, 2 down, 2 down, 2 down, down. Red hammer, green hammer on the week. We already went to the upside. We already took out a target. Yeah, I'm not gonna play this. I don't like how this daily chart looks. So I'm gonna delete this from my list. You guys could play Peloton, I just don't want to. There's better plays. When I'm like iffy on something, I just consider like other plays and I say like, is this worth getting into? Do I have better plays than this? And if the answer is yes, I have better plays than this, then I just remove it and I don't look back. Oracle's interesting. This would be like kind of a new type of trade for me. I've been trying to do gap fills more recently. So Oracle was exhausted to the upside. It gapped up to the upside and then it came down. It's kind of just bouncing in that range and then it gapped down. And now it's kind of just like in no man's land. So I've never seen something like this. I haven't. So this is like very interesting. So you have a gap fill on both sides. So if you do calls, you can fill this gap, right? If you do puts, you can fill this gap, but you're gonna have psych levels in there. Let me see. If you guys haven't figured out, my white lines are entries. So we have an entry on both sides. And then, so for gap fills, your target isn't the high. So if you're getting calls, it's not going to be the high of this candle, it's going to be the low because you're trying to fill the gap. Calls are riskier on this one because as you can see here, my orange lines are weekly as well. So as you can see here, like if you do a call, look at the weekly. You do a call on the weekly, you're still inside the previous week, inside the previous week's range. So inside on, I found like inside on the month isn't as big of a deal. You can still get like decent moves for day trades, I should say. Inside on the week and day, you're probably going to get chopped up. That's why I try and break outside of the week's range. But this gap fill one, it's a little different from what I've seen. So you can fill this to the upside. But like I said, the calls are riskier than the puts. So if you just want to play the puts, go for it. Okay, and then, so I usually write this down and then I'll fill in my psych targets. So we have calls on Oracle, 2 down, 2 up. That's a gap fill. And if you break above 99.95, you're going to target the low, which is 102.28. And then puts on Oracle, 2 down, 2 down. The low, so we want to break 95.81. Our ultimate target is the high here, which is 89.99. But oh no, I wouldn't put a psych target in there. Okay, never mind, we're good. See how the puts like, and so if you break the low, that's a 2 down week. Create our alerts. We have to create 2 alerts. So we want it above 99.96. We want it below 95.80, 95.80. Gets a little tricky when you're playing both sides here because like you really have to know like what your plan is. Like for instance, if it alerts calls and then you see it like reverse to the downside, like you might want to buy, like you might buy puts, but it didn't alert for your put level yet. And then also if it forms like a 3 on the day, like if this took out Friday's high tomorrow, it's probably not going to reverse and then fill this gap to the downside. It's probably not going to. So it's going to, the target on that would be the low here to form the 3. So you probably like if this hits one side and reverses, you're probably not going to want to play it. I just won't play it. Chewy is exhausted to the downside. We have an inside bar on the week. You can see it's exhausted on the monthly, on the weekly, on the daily. So I would want to do I would want to do calls on this. Like I don't want to do puts because that would be 1, 2, 3. That would be like there's 3 2 downs in a row, 1 and then a continuation. Excuse me. So I don't want to do puts. I'm looking at this again. The high of the week is 56.99, which is right here. So there's 2 targets in between. There's better plays than this. I'm not going to play this. Yeah, I'm not going to play it. You guys understand why, right? It's because we're an inside week, but to bring us to like a 2 up week, we have to take out 1 target and then 2 targets. They're close, like those are close targets, but I have better plays than this. And you don't want to have too many plays. I try not to have more than like 16 alerts on any given day because it gets overwhelming. So I'm just not going to play this. I have better plays. We'll see what it does tomorrow. Oh, it's not what I want to delete. Beyond, it's kind of the same setup as Chewy, right? Bunch of 2 downs in the month, bunch of 2 downs in the week. Could have potential reversal here. High of 69.57, and then $1 away is your weekly target. So this one would probably be a swing for me, guys. So if we break Friday's high, we're going to target this close target. It's only $1 away. You probably get like 15%, 10, 15% on that. That target is also, it's your weekly to form a 2 up week. And then just target, I would probably just target this, your weekly target. I have 75.40. That didn't go in the right spot. There's another target here. Okay, so if I got into beyond, I would probably get the 31 December expirations. And then I would scale out with this first target, and then I just let it run to these next ones. How do you tee up the option contracts on your brokerage platform? The open, I assume you need to get in quickly when you get the alert. Okay, so let's yeah, no problem, Andre. This will be posted in the Facebook group too if you want to review it after. I'm gonna be hanging out for a little while here, so, and I'm gonna keep doing these in the future. So thanks for joining in. How do you say your name? Femi? Is that right? Hopefully I'm saying that right. I'm gonna show you a play that I took on Friday. Let me see. Okay. IWM. No, I don't want to show you those ETFs. Uber. We'll look at Uber. Just look at. So Uber, I play using the 15 minutes, and I've been using the 5-minute candles recently too. So you can see 12:17. So this white line was my alert entry. This is my alert entry. It opened up. It formed a 3 on the day, so this was risky, but we did take out some targets. I just made sure to scale out significantly when I hit both of these. I wasn't going to hold for my last target because we formed a 3 on the day. Anyway, so I don't like tee up my option contracts before the day starts or anything like that. I wait for a pullback on either the 15-minute or the 5-minute. And so in this case, Uber opened, it went up, up, up. It broke the entry level, but it was on a 2-up candle. So I'm not going to get in right when it breaks the entry, and I'm not going to get in if it breaks the entry level on the opening candle either. I want to pull back. So what happened? You broke your entry, you took out a target, and then it pulled back. You had a 1 bar here. So right here, when it broke the high of this candle, that's when I went in So hang on, let me explain this better. So it alerted, right? So I moved it to my alerted picks. Okay, then I go in and I'm watching the 15 minutes. As these form, I'm moving my alert to this high, or not this high. I'm waiting until a pullback and then I'm moving my alert. So when I got a pullback, whether it's a 2 down or a 1, I'm going to put my alert at the high of this candle. And when the next candle opens, if it breaks above that high, I'm going to buy my contract. So when it alerts again, I'm going to go in, I'm going to get the strike that is closest to, I usually do the strike that is closest to the current stock price. I want it to go in the money quickly. And I also do it according to my level of risk. So there are some, like, let's say it's a $300 premium for the closest strike, but you don't want to spend more than $200. Then you might have to move your strike 2 or 3 contracts out, right? If that makes sense. So I don't tee it up. I just wait till it alerts. I go in, I find the best one to buy, and I buy it. So it broke this high, I bought it. I put my stop here, and it just went up, up, up. I can move my stop here. I didn't get stopped out though. And then it just came down and went back up, and I added right here, and I just wrote it up. Okay, let's go back. We were at beyond. So calls on beyond. What is that? It's a 3, 2 up. We want to break above 69.57. Target of 70.58 to form a 2 up week. Our next target is 74.49. That's daily. And our next target is 75.49. That's a weekly target. And no problem. So we want to break above 69.58. Look at Johnson and Johnson. Why did I have this on here? Probably for puts. I don't like it. Low of 163.80. Yeah, I don't like it because we're exhausted the upside, so I don't want to. We're not even necessarily exhausted. We can take out the time. We're kind of just like floating in the middle here. I would take puts, but we're 2 targets away from forming a 2 down week. So if we took puts here on the low break, we'd have to beat this target and then this target to form a 2 down week. So I'm not going to play that. PayPal. PayPal, we're going to do calls on. This is an interesting one. We do calls on PayPal because look at all these 2 downs. 2 down months, 2 down weeks. Tried to go 2 up 2 weeks ago, it failed. So let's see. So this one, the high is 187.84. Okay, and our target is 197 or 195, which would form a 2 up week. So okay, but the close, we have to look at the close here. So the close is 186. Assuming that's where it's going to open, around 186. It moves $8 to $7 a day. So 186. So $9 move. It's a little risky, but it's not like unheard of. As you can see, it's moved between $7 and $10. So you can do calls on PayPal above Friday's high. Your target is that candle for the week. You could swing this, you could not swing it. I personally like day trades with cheaper options because what you can do is you can hit your targets, you can scale out a few contracts. Like if you get multiple contracts, you can scale out and then you can just leave one run for your swing. But it's a lot riskier when you don't do that. If you just buy a $200 contract, you let it go, it could open the next day, you could lose 60% of it. So it's better to day trade it. And if it's cheap enough and you're willing to risk losing the op or the premium on one contract, you can just let it run. So PayPal's a little risky, but PayPal tends to move a lot. It's due for a reversal back up. So we got calls on PayPal. We had a 2 down, 2 up on the daily. We want to break above 187. What's that? 187.84. And we're targeting. We also have a psych target here of 190. Our ultimate target is 195.24, which would form a 2-up week psych target. Let me draw that psychological target. And what did I say? It is 190. Sure. Oh, that's what did I just do? Delete that. Radar alert. We want to go above 187.85. Interest. Okay, so I've already got. We got 10 plays already. If you guys haven't seen the first 3 that I already wrote down, I'll go through those later. Pinterest is exhausted on the week, on the month. We formed a 3-day. Do we even take? Yeah, I think we did a high of 37.35. Okay, we didn't take out this target yet. So the play here is you take this high, your first target is here, which is 5 cents away. So you're not going to scale out there. You're just anticipating it's going to break through that and make a 2 up on the week. Then you target this high and this high. I don't want to play this. Can't explain why. I just don't want to. I think it's because I played pins like a few weeks ago several times. It just didn't work out. But this is a similar play to Beyond and Penn. It's very similar where we had a 3 on the day. We're exhausted to the downside and we're trying to just bring it back up, but I don't want to play this. You guys can play it though, if you want. So you break this high, your next target's 5 cents away, which forms a 2 up on the week. Then you just target this high and this high. These 2 candles. I don't want to play it though. Hood. Hood is due for reversal, but an IPO price. It's not a ton of price action to go off of. You have this huge IPO bar or right after the IPO. We finally broke below it and we've just been going down. So let's see. The high on the week is 2020. Is that right? Did I have it right? 2020. I don't like it because if you break this high on Friday, you have 1 target, 1, 2, 3 targets to beat to make a 2 up on the week. It's not a lot. It's like if between the 3, it's only $1 move, but I don't want to take it. I don't want that many targets because that's just more potential resistance. So you have to break through 3 resistance levels in order to go in force on the week. So I'm not going to play that. Uber, I played on Friday. I didn't want to swing it. I took my gain when I had it. I do that on a lot of stuff. There's weeks I'll play something every single day. It's like, yeah, sure, I could have swung it, but I don't like that risk unless it's like a prime setup on the month and the contracts are cheap. Or if something happens where I had to walk away and it just like reversed on me and now my contracts are like down 80%. It doesn't happen that often, but if that happens, I'll look and be like, okay, is it still valid on the week? Sure, I'll just make it like a lotto and swing it, and I'll just let it go as long as there's still play. Why did I want to play this? because it's showing that it already started to reverse, but didn't take out like your weekly. It didn't take out your weekly targets yet. 41.25. So we could break above 40, which is the high on Friday. We could target 40.22. 41.25. Do I want to play that? Probably not. I'm probably not going to play that. There's better plays. I'm not playing that. Nike, let's see when earnings are. What's the, oh, earnings are tomorrow. So I will not be playing that. I don't play stuff when there's earnings the next day. So if there were earnings on, let me clarify, if there were earnings on Tuesday, yes, I would have played Nike. But if there's earnings tomorrow, I'm not going to play it. Palantir. See, this one's a little better. So the high is 1912, but the high on Friday was 1910. So I would just set an alert above 1912. And just target this. How much is this? Has only been moving $1 a day. It closed at 19. So could go up to the second target of 2015. Target 1 or target 2, sorry, target 1. And there's your weekly, pretty much daily break as well, which is why it's orange. Okay. We got calls on PLTR. What's that? 3-2 up play. We want to break above 1912, not 1910. You just want to wait for those extra 2 cents because of how close these two are. And then your target, and that forms a 2 up week. And then your target is 1958. Second target is 2015. That's your daily. That's your weekly. Okay. Create alert once per minute above 1913. Cool. JD. I played JD a lot the past few months. I played puts on it pretty much exclusively. So you look here. This is like a pivot low, right? Because it hit this low and then it reversed and boom, it went up. I think it made all-time highs here too. Oh no, it didn't. That's a lie. But it went up. So you could expect this potentially to come down and take out this pivot low before it reverses. But it's already exhausted the downside, so I don't want to play puts. I'd want to play calls. I'd want to play calls on this, but the high, the weekly high to get out of the inside week, 78.58. So this is a pivot machine gun. 81.08, 80.65, yeah. High, lower high, lower high, lower high, lower high. I think these charts are, this is the same high. I don't know, I don't think that means. Let me look. Let me look if it has the data wrong. The Webull did this once before and it data off, and I just sent a report to them. What day is that? That's the 15th and 16th. So on the 15th, let's see. The high on the 15th was 76 cents. Right? On the 16th, 75.99. I don't know if that negates it. It would negate it if it broke above the high, but it didn't. So this is technically an inside bar with a 1 cent lower high. So that's a pivot machine gun. This is your pivot machine gun play. That's your ultimate target. Another target here. Another target here. These two are so close, I just call them the same target. 1, 2, 3, 4, 5. pivot machine gun play. Do you guys understand what a pivot machine gun is? Why the strat says that it works? So we got calls on JD because it's exhausted, potentially on the week. We want to break above, we're 2 down, 2 up. We want to break above 72.63. Target 76, 77.85, 78.58, 80, 65, 81.08. 1, 2, 3, 1, 2, 3. That's our weekly. So 78.58 forms a 2 up. Oh, 2 up. I always go light with pivot machine guns because it has to get through 3 targets to form a 2 up on the week. But the reason they say pivot machine guns work, 72.64. The reason they say pivot machine guns work is you got people here that pretty much here they tried to short the stock and their stop went at the high here. Next day you got other people tried to short it, their stops here. Next day, short it, stops here. Short it, stops here. And so if this reverses, it takes out those stops, it just accelerates it up. Yeah. That's pretty much it. Yeah, so if it reverses here, you got people that were short here, it's going to accelerate the price up, stop out these people, accelerate up, stop out, accelerate, stop out. So it's just going to push this price up. You also got to look at the trading range. So this closed at 71. This typically moves, let's say, let's be generous, moves $4.50 a day. So $4.50 plus 71, that's 75.50. Yeah, so we'd be lucky to hit this first target with that trading range. But the pivot machine gun can throw the price up more. But this is risky, right? So just go light. Go light. Scale out most of them when you hit this first target. Shake Shack. I can already tell you I don't like it. Because we don't have a pivot machine gun. High is 75.44, which is here. So we have 2 targets away to form 2 up on the week. So I'm not going to play that. We want the target. We want it to be 1 target away to form 2 up week, or we want a pivot machine gun to form a 2 up week, or we want the day break to form like a 2 up or 2 down week. I haven't seen any 50% plays. Let's see. So ExxonMobil, low. We got 2 down on the month. I don't think I even want to play this. 59.69, 59.69, 62.47, 62.45, 62.72. I'm not going to play this. You got apps. You got an inside bar on the week. So I'd want to play this to the upside high. 56.04 right here. So this is a good play. So you break Friday's high of 55.62. Oh no, that's so close. But that's okay. And then you break your daily target, which is going to be 5604 to form a 2-up week. And you just target this next one. Or you could swing it on the week. Oh no, that's the target on the week too. So that's your play right there. I wouldn't swing this. This is a day trade. Calls on apps. You got a 3, 2 up. You want to break 55, 62. Your first target, which I probably would not sell at, is 5604. That just tells you at what point you could probably add to it if it breaks through and doesn't reverse. If it breaks through that first target, it would form a 2-up week. Then your ultimate target is here. So this is like the early entry to form a 2-up week and hit your weekly target. So if you break the high on Friday, your closest target on the daily is the same target to form a 2-up on the week. So you're getting an early entry, so what, 50 cents earlier to make a 2-up week. And when you make the 2-up week, I guess that's the target too, 56. When you make the target, it's it'll probably hit that in a day. Yeah, no problem, Femi. Have a good one. So there's 2 targets. I missed a target here. 56.63. So let's create the alert. Above 63. Okay. Splunk. Oh, this is like one I was looking at earlier. I don't really like this. Could reverse up. 115.27. Oh, no, never mind. That's not bad. Okay, so we break Friday's high of 111.64. Our next target is 115.27, which is also the target to make a 2-up on the week. So like I said before, my day trades are early entries to the weekly trades. So you get the early entry, you could scale out until you hit, you form a 2-up on the week, or you just hold, you go in light, and then you add to it, and you can swing to hit this ultimate weekly target. But there's other daily targets in here. Right? There's a daily target there as well. But personally, I don't like swinging, so I would buy contracts here. I might add if there's like reversals on the 15-minute or pullbacks on the 15-minute, and I don't get stopped out. I just add. I take most off here, and if I decide I'm going to swing it, I just let them run. So calls on SPLK. What is that? That's a 2 down, 2 up play. We want to break above 111.64. Our target is 115.27. If you hit that first target, you're making a lot of money. You'll probably get 100% gain on your contracts, at least. That'll form a 2-up week. And then your next target's 118.80. And then another target of 120. Create alert above 111.65. Walmart. So this is an interesting one. So you have a 2 down on the day. I was trying to play this 50% on the month before. Okay, so you have a 2 down on the day. I marked this. Do you guys know how to draw these lines? Like to get the Fibonacci retracement levels to see the 50% mark? If not, let me know. I'll redraw it. Okay, wait. I want to delete these. I guess I'll leave that. Okay, so if you break Friday's high, you break Friday's high, your next target is here, which is above your 50% mark on the month. So you're getting an early entry on the daily to get a monthly swing. So you have to consider though, where did this close at? 138. Is this going to go up $15 to hit 152? Is this going to go up $15 in 2 weeks to finish the month as a 3? Let's see, it only moves about $3 a day. It closed at 138. It has to move $5 to even get to our entry. It's probably not. It's probably not going to happen. Because even if it breaks above our entry, right, this average trading range, it moves. Oh god, look, it only moves like $1 to $3 a day. Let's say it moved 5. Well, then it's gonna have to move the full 5, and once it gaps up, it's gonna have to move the full 5 in order to break our daily entry. And if it breaks our early entry, it has to move up $3 to get past the 50% rule. So it's too far away from the 50% rule for me to take this. Yeah, I'm not gonna do it. I like it, but it's risky. I'm just not gonna risk it. I have too many other good alerts. I'm not gonna risk it on like a monthly swing like that. Docs. Okay, so you can see this downtrend on the week. We take out this low yet? No, not yet. Well, wait, 50, 47.50. So look, we took out this pivot low already. Came up, went down a little, and then boom, took off. We just came down, we took it out. So now we're going to, we'd look for calls on this. There's not a pivot machine gun here. You can see because you have high, lower high, lower high, lower high, lower high, higher high, lower high. So this negates a pivot machine gun. The high on the week is 56.19, which is here. So you have 1, 2, 3 targets to break through on calls to make it 2 up on the week. So I'm not going to play that. Apple is one I marked already. So I have puts for Apple. You see all-time highs consistently on the week. Hit this all-time high, now it's starting to fail. It didn't form a 3 on the week. It didn't have enough time, but next week, if it breaks Friday's low, we already have a 2-down week. We can form a compound 3 and take out this week's low. That would be our ultimate target. So I have puts below 169.69, target of 168.34, ultimate target of 164.28. This moves $6 a day. So it closed at 171. Yeah, there's a good chance it could definitely take out this first one, and it has a possibility to take out this one as well. So yeah, that's my play on that. AbbVie. Okay, so this one I rarely do this. I rarely do breakout plays, but I'm trying to experiment with new things. I like calls and puts. I like to have plays each day. Like to have calls and puts. Some of them are gap fills. Some are pivot machine guns. And recently I've been doing one breakout trade a day, or one breakout play, where we break above all-time highs and we try and just keep going up. And I like that because if the market is just going crazy, you can make a lot of money on this. So I picked AbbVie because we're just in this uptrend, constant all-time highs. Potentially failed on Friday, or it potentially failed on Thursday, and now it's coming back down. But if you break Friday's high, your next target is the all-time high, which would form a 2 up on the week, big 2 up on the week. So this is a breakout trade. This is very risky. You want to go light on that. And then Rivian gap down. So this is a gap fill. Yeah, ribbon's a gap fill. So if you see a gap down, so what happens is we break the high on Friday, we target the low of Thursday to fill this little gap. We'd be inside on the week. So it's a little risky too. But like I said, I like to get a few different types of plays. So break above 160, $100.60. We target 107.06. That's a big move. That's a 7% move if it goes up. So if this works and you get calls at the entry and it fills the gap, you're going to make a ton of money. That's why I have this play in here. But go light, right? You go light because there's nothing on the week. There's no setup really on the week. You're going to be inside on the week. So you just go light with the gap fill play. So that's it. Those are all the ones I have set up to pick. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 plays, but we have 2 on Oracle. So really 15 plays that are set to alert. Like I said, I try to keep it around 16. 16 or less, I should say. Anything more than that, I get overwhelmed. And when you have 10 things alerting at once, it is very difficult to stay disciplined. So if you guys have any questions, if you have any charts you want me to go through, please let me know. I'll stay on for just a few more minutes if anyone has any questions. Yeah, those are my plays. I will take a picture of this. I'll upload it to the group for you guys. For anyone that's interested, take a picture of that now. Play. All right, I don't even know who's on here still, but I'm gonna hop off if you guys don't have anything. So I appreciate your time. Thank you guys for listening. Hopefully you learned something. I like going through this and explaining it to you guys. I've had much better success with my picks in the past few months using kind of this same strategy that I was just showing you guys. So yeah, thanks for hopping on. I'll do more in the future. I will post this watch list for you, and let me know if you guys like it, if you want me to do something different, if you want me to keep doing them. Happy to help, so thank you guys.